Hello, Uncle Jim here. Today I want to share with you how selling options should really be a part of everybody's retirement strategy. I've been selling options now for many, many years, and it's been able to give me the opportunity to actually reach financial independence sooner than I ever thought possible. Today I want to share with you what are kind of some of the key factors and why you should really include selling options as part of your retirement strategy. And I also want to share with you how I did back in March in my Roth account selling options. I've got another retirement spreadsheet and it'll be at the end of the video. And please stay tuned. I think you're really going to enjoy what I have for you today. So thanks for joining me. Okay, now I want to share with you how I have actually planned my retirement. I actually have been a dividend investor for many, many years, probably longer than I've been an option seller. So it's a combination of those two things. I've been able to, if you follow this channel, I've been able to make between 2,500 and 3,000 every month in my brokerage accounts. And then I've also been able to do pretty much 500 or so every month in just my Roth account. I've actually got two other retirement accounts, and you combine all those, I'm bringing in 3 to 4,000 a month in options premium, and with dividends that actually moves it closer to 5,000 a month, and that makes a really big difference with being able to reach retirement. At least for my calculations, I like to use some websites that talk about the 4% rule and how much you can draw down your accounts. But when you're bringing in this kind of dividend and premium income, it really can change that, how much you need to withdraw. I've found I've actually had not needed to withdraw anything. And then I'm also one of those, I'm never really going to truly retire. I like to work. I will be working more part-time. I'm a software developer, and I am doing software development part-time for a client I've had for over 10 years. And that's just something I like to do. I might even, if I don't want to do that anymore, I might take a part time job at a golf course so I can play golf and, less expensively. And, it's another thing I do enjoy. So in a sense, I don't really look at retirement is a certain point. I find that so many people I've known over the years who really set goals of retirement, when they do retire, they're kind of lost. I do think you need to plan for retirement. You need to take steps, build up more friendships and have more things to do during retirements, more hobbies, more things you enjoy. Um, and a lot of people don't realize that options don't need to be really risky. They hear options and, their mind takes them to something that's very risky and they're going to lose big money. You can really do it in a safe manner. And I share that on this channel a lot. I share that the fact that you can look at what's called delta and you can minimize how big a risk you're taking. And again, if you're looking at buying some stocks, say you want to buy a company like Intel and you know what you want to pay for it. Well, you can sell a put and you can sell it at a price of what you want to own it and gain more premium. And you can do it in such a way that, if it's cash secured, meaning you've got enough cash to buy it anyway, why not earn a little bit extra premium? And on the flip side, once you own the stocks, why not sell some covered calls? And a covered call is saying, well, I'll give you an example. For me, I've got Coca-Cola and say, hey, Coke is worth 64, 65 currently, but I'm willing to part with it in a year for 75. Well, people will pay you premium to buy that option, so they're buying it, you're selling it, so they'll pay you some nice premium to have that opportunity. And what I've found is as long as you manage your options, you can actually roll it, close it. There's strategies you can take to actually deal with that. And I'll talk a little bit when I go over my worksheet at the very end, but I know I will lose some people that may not want to watch that part of the video. And then I do feel like there's a lot of people who have fear and they actually do a lot of overthink. I've gotten a lot of questions from people in my Patreon that they have ideas about stocks and then it's just hard to pull the trigger. I can help if that's something you need help with. Take a look below at my Patreon memberships. I've got two different levels. and I'm always willing to answer questions and jump in and help people. So, and that's one thing you'll hear from most of my patrons, that I do answer questions quickly. I am involved. But that fear and overthinking, I had that too. But now that I've been trading options, I've sold hundreds of puts, hundreds of cover calls, and it's now become second nature. Now, it doesn't mean you're not going to have losses. Everyone has losses, and it just plays into the game. It plays into how you actually sell options. And I really push a passive strategy, so I only keep, probably 2 or 3 hours a week is all I spend to make that kind of money. So I encourage you to take a look. Try not to overthink. Try not to be overwhelmed by fear, and take the first step. Make your first trade, and do something that's really, I mentioned a 20 delta, but you can take less risk. You can do what's called a 10 delta, or even a 5 delta, where you can make a little bit of premium and see that it actually works. So that being said, as always, please hit that like button, subscribe. I'm trying to grow the channel. I want more people to understand that this is really something that needs to be thought through and considered. And very few financial planners actually do this. So there are a few, but they're far and few between. So I encourage you to seriously, take a look. But let's jump into the next part of this worksheet, and I'll share with you what I did in my Roth account. I only did 5 trades, and I made over $500, and that's on a $50,000 account. So that's like 1% per month. So at that point, or that rate, I can, add a lot of bang to my retirement accounts too. I'm not old enough to really be withdrawing from them, but I'm a couple years away. So let's go ahead and jump into that other part of the video. I hope you stay tuned. Thanks for joining me. Okay, I've opened up my retirement spreadsheet. This is for March, even though it shows Friday, April 1st. It's based on values at the end of March. And I was again I did 5 trades. At the top, I share my initial account when I first started tracking this and started selling. I think on occasion I would sell cover calls, but it wasn't until September that I actually started selling puts and doing a little bit more tracking, and trying to actually boost those returns in this Roth account. So initially it was at 50,608 back in September with 12,511 in cash. Currently it's at 52,134 with 15,957 in cash. And like I said before, I've been able to average around 500 a month in extra cash. Now with the market downturn, there's points during the month that it hit 53, 54, but with the downturn, it's some of the stocks that I do have in the account have taken a little bit of hit, and we'll jump into that next. So I've got a Wisdom Tree hedge fund, and it's down a bit from when I started doing this, and I do write covered calls on it. I do have some iShares DVY that actually has done really well. It's at 128, and I'm looking to boost that and get that up to 100 shares. Right now I only have 31 shares. Then I also have iShares Core S&P Mid Cap, which is IGH, and it's currently right around 268, 270. So it's down. I've been selling cover calls on it for a while at in the 270, 280 range, and so this is the total value. Now, you may wonder why this is in red, this negative 2023. In your account, it actually tracks, if you were to liquidate all your positions at that particular date, you would have a loss. But this, in my mind, is a little bit misleading, because a lot of those I've been able to roll out of, I've been able to close, I've been able to do things to keep from taking this kind of a loss. But I do like to show it because that's how Schwab looks at it, and it does impact how your cash works in your account. So let's actually go through the trades. So the first one I did was Lumen, and it was in the money. And this is a great stock to get started with. It's right now right around 11. It's at the time it hit, I think it might have gotten down to below 10, which on an $11 stock, that's like 10%. But it's with $11, and you can make some pretty good premium. I've got a vertical put credit spread, but you can do a cash secured put. I believe I have more Well, I do. I have more in my brokerage that isn't. It's just purely cash secured puts. But I was able to do this with 11.6, and I believe I didn't pay much for the outer arm or buying the put at $6. I think it was relatively cheap. Let's move this out of the way so you can see the totals. So I rolled it and I kept it pretty much at the same strike. Actually, I thinned the spread a little bit, so I kept the short of $11, but I increased from $6 to $7 for the outer arm or the option that I purchased, the put that I purchased. So, and I was able to make $133 with that roll. And again, Lumen has been a really good company that I've worked with, and it also pays, I believe, between a 7 and an 8% dividend too. So it's a good thing to own. You can actually earn some really good dividends with it. LEG has been on a kind of a downward spiral, mainly because of going into a recession, and I believe the housing market, it builds furniture, it does different things related to the housing market, and I think because of that, with interest rates going up, it's been hit pretty hard. But it's also paying a good dividend. It's, I think, almost 5%, like 4.7%. So you can see here it was currently at that time at 37.30, so it was in the money, and it was in the money by $3 or so. But I was able to roll it out to the same strike price. But I did roll it farther out, so I rolled it to 617 versus April. So I rolled it out like 3 months in order to get that premium. Plus, I wasn't ready for it to be assigned, and I was able to make good premiums. So even for going 3 months out, I was still able to earn $120 in premium, which was really good. And it was, with a cash secured put, it's relatively easy to roll out. So, and it's a company I still like. When I first started trading with it, it was in the 50s. Now it's in the high 30s, and I think it's going to come back. I think it will go back into the 40s. It may take 6 months to a year, depending on what happens and if we go into a recession or not. So the next is Intel, and Intel is one of my favorite companies to actually trade on because it's very reasonable. It's a technology company that's fairly reasonable. It was out of the money. I had a vertical put credit spread at 45, so the short was 45. The option I purchased, the put I purchased was at 35, and I rolled it from 325 to 422, so a little less than a month. Um, and I was able to make 54 in premium, which isn't bad. And these are all one contract. You know, I typically, actually, that's not completely true. I think Lumen maybe three, because again, it didn't need much cash since it's with a $5 spread here and then a $4 spread here. That's like $400. So 3 contracts, I only required about 400 in cash. So other than Lumen, all the others are single contracts. So this Intel trade was a single contract. You'll notice in a lot of my videos, especially with my brokerages, I typically will do 2 to 3 contracts now. But in this account, with it's so small, but the cash is growing, I could see by the end of the year I may be doing 2 contracts on a lot of these. So, and Intel's a good company. It's one of the only technology companies that's paying over 3%. I think it's 3.1% in dividends. And they're bringing a lot of technology home, or a lot of manufacturing home. They're going to actually be building plants in the U.S., which I think is a great thing. So Intel's just a company I've traded many years and really like. So next is IGH. This is the ETF. It's the iShares Core S&P Mid Cap, and it's done okay. It's unlike some of the growth ETFs. It hasn't dived majorly. It does pay a dividend. I don't think it's a really high dividend. I think it's between 1.5 and 2%. But it's trades in a real small range, and I've been able to do pretty well with it. And I do own 100 shares of it. So with this, I did a covered call. The current price at 270, and this is a new one. So I had closed it the previous month because I was able to close it for a small amount, and I made $144 on it with it expiring on April 14th. So it worked out quite well. And this is where I share the cover calls. You can really do really well with cover calls too. And this has been a good ETF. It's pricey though, 260, 270. But if you already own it, or you want to, um, invest in a really good ETF that's not being hit like some of the income-based ETFs, it's a good one to deal with, and you do get a little bit of a dividend. Next is Ford. Ford's another good company to work with when you're getting started. It's come down a bit, I believe. Here it's showing it was 1670 at that time. I believe it's under 16. I believe it's like just shy of $16 right now, but it got as high as the low 20s, low to mid 20s. So you don't need much cash. And this one, I did another vertical put credit spread. I did a 16 short in the 12 outer. So, and actually, I may have done more than one contract for this one too. I do believe I also did three for this one. So if I can do these small spreads of, this is a spread of four, so $400, I will do it. So kind of misquoted earlier. So actually, these inexpensive stocks. And this is the first time I've done it. I may actually look at doing it in my brokerage versus just doing cash secured puts. Yeah, this was also three contracts, and I was able to roll them out to April 14th. So not very far, 325 to 414, and was able to make $85.70. So pretty good. And the total for all these trades and was a total of 537.85, so right around 538, which on a monthly basis is 1.03, and a yearly basis is 12.38. So that's based on the values up above that I shared a few minutes ago. And then this is stuff I've talked about in the past, but this is the return. I originally had the account before I was selling options, and at one point I did have this account managed, but this is when I took it over from 2016 to 2020. I was able to do nine and a half. So you can see just doing selling options and making premium, I would have done better than I did between 2016 and 2020. And then I was just combining these two, saying, well, if I still get that kind of a return, I could potentially do 21, 22%, which with the rule of 72 would mean I could double the account in 3 years. Now, of course, that's changed quite a bit with having a down market. I mean, the actual account return for this year, I think, is down. Well, no, it's still up, but it's not going to get this kind of a return this year, I don't believe, not with the down market. But this just kind of gives you a for instance on the rule of 72. If you're not familiar with it, is you can take 72 and divide it by whatever return you think you can make. So say you can make a 10% return, then using the rule of 72, you divide 72 by 10. In 7.2 years, you can double that account, and that's where I'm getting those numbers. Now, the last number is what I had an advisor helping me from 2011 to 2015. And when I look back at those numbers, I was only earning 4.8% using an advisor, paying him 1%. So, you know, it, it you can do this stuff. It's well worth it. You can actually boost your returns in your retirement accounts quite a lot, as you can see by these numbers. And then I also have some important notes. So I had four puts and one cover call. They were kind of spread out. You can see here date place 3/7, 3/10. Looks like I did two on 3/21 and then one on 3/23. And again, these were market trades in and out. Didn't spend much time. Probably didn't spend more than a couple hours all month on doing these trades. Um, all put positions were less than $50. The cover call was expensive, but everything else was less than $50, so inexpensive, and they're value companies. So the chance of them coming down significantly is small. To give you, for instance, if you got someone like a Microsoft that I think hit 350 and now it's trading at 280. Well, it went down $70, which is quite a bit. So I don't trade in Microsoft anymore, mainly because it's a little bit, it just moves too much with being so expensive. They're all good dividend players, and especially the puts. Now this IGH, like I mentioned earlier, that ETF pays like 1.5 to 2%. But that's still not bad. You can't do that well in a lot of your you know different ways of earning interest. So it's still a little bit better than something interest bearing like a savings account or something along those lines. Next, I've worked with a number of people. I mentioned this earlier in the video. There's a lot of fear, a lot of pulling that trigger and actually, you know, doing what you need to do. And, with the ability to roll, with the ability to minimize your risk, there's ways of doing this so you don't take a ton of risk and you can actually do quite well. Like I said earlier, though, it doesn't mean you're not going to have losses. I've had losses. Everyone has losses with certain positions. It just comes with, depending on earnings and other things you're just not predicting. Stocks can move really quickly in a short period of time. And then also mentioned I rolled LEG and Lumen out a little bit farther to make a little bit more premium, and that's okay. You can go a little farther out. I sometimes will go 6 months to a year out if I really don't want to give up that stock or have it assigned. I'll go out a little bit farther because I want to keep it. I did that with Procter and Gamble. I've got 100 shares of it in my brokerage, and I rolled it pretty far out, mainly because I wanted to keep it, and I was able to get pretty good premium. Actually, I think I got like $400 of premium with it, and rolled it from 150 to 160. So you can see it does really make a difference, selling options, and it will really boost your income in your retirement accounts and even in your brokerages. So thanks for joining me. Hopefully I didn't get too long-winded with this, but as always, I come back, and if you have any questions, please post a comment below. Thanks for joining me.